Self-employed writer Nick Bendel's business is doing well, but he's noticed the cost of living is rising.
Everyday items in supermarkets seem to have gotten a little bit more expensive over the past few months.
He's one of 10 million Australians who'll get an extra $420 at tax time, but that won't help much if his mortgage repayments increase.
It looks like rates will go up sooner or later, and while I'm not happy about it, I have budgeted for it.
Experts say the Coalition's cash sweeteners in the federal budget could drive up inflation and force the Reserve Bank to raise interest rates sooner than expected.
These one-off perks are not going to touch the side for the average mortgage holder who is looking down the barrel of monthly repayments that are $303 higher by February next year.
Treasury forecasts consumer prices will peak at 4.25% this financial year before easing back in the following years. It expects wages to grow faster than inflation from next financial year.
Seeing a tight labour market is likely to remain fairly tight going forward, and that does, in the past, tend to drive wages up. Now, obviously, we've seen less and less of that over time.
Economists say the bargaining power of unions to demand pay rises has declined, and many workers are locked into enterprise bargaining agreements.
We've also, of course, seen the types of agreements across the Australian economy keep wage pressure down, and that includes the state governments, for example, who've put caps on wage growth.
This 122-year-old mattress manufacturing business is already grappling with soaring costs.
Steel is up around 20-25%, cost of wood's up about 80%. Labour and wage increases are something that we've had a long-term commitment to passing on in excess of CPI. So it is something that we're going to have to be incredibly conscious of over the short term.
Ines Willocks from the Australian Industry Group says not all businesses can afford to pay more.
With labour shortages and skill shortages, businesses are facing a tough time, and many, particularly at the smaller end, just don't have the capacity to pay big wage increases at the moment.
This Vietnamese restaurant is one of them.
Today I go to buy the onion, $1, but tomorrow $1.90. But I cannot raising up the price for customer every day.
It's not just the rising cost of buying produce and goods that's hurting businesses like this. Less money in the pockets of consumers means fewer customers through the door. And that will happen if wages stay stagnant while interest rates rise.